What is an IPO? So an IPO is a term for that it relates to stocks, and it stands for initial public offering. So what that means is a company is created, and it's created using initial private funding. Generally speaking, this is from the individual starting the company themselves, family members, or venture capital. Venture capital is a fancy term for private investors that invest in up-and-coming companies as a way to get higher profits than they would from just investing and having more control over those companies than they would from investing in individual stocks once it goes to the market. Also, it usually means that they have a higher growth potential, usually more risk, but a higher growth potential because less people are in on it, which is pretty attractive. But for the average person, it's not really an option unless you know people. Once that stage is passed, once the private investors think that they need, more money and want to pay out for their investment, then they'll offer public shares of stock. Those public shares of stock are then put on the New York Stock Exchange or the NASDAQ, and that's what's called an IPO. So all this really means is that those public shares of the company are now available for individual retail investors. Retail investors are normie people that are able to buy shares on Robinhood, Fidelity, Webull, any of those, or others. Now, the reason I'm talking about this is most recently Snowflake, a internet company, IPO'd on September 16th, and it doubled in value within less than a week. So it's definitely a hot topic, and it's something that a lot of people look at as a chance at, making money very quickly with something that's new. And also because it's new, that always lends to a good amount of hype because everyone's talking about it. It attracts people because hype always does. And so all that being said, I personally don't buy IPOs, and here's why. So I think that there has been, and this is my opinion, always talk to a financial advisor, but my opinion is that companies that aren't profitable, especially, but preach high growth aspirations, often will go for an IPO so that the founders can cash out. And they're not really worried about the long-term sustainability or profitability of that company. Good examples of this are WeWork, who applied for IPO at a $50 billion valuation. And a month later, they had to move that target down to under 10 billion because of a lot of issues with their accounting. And they ended up never going public. And they have talked about having aspirations of going public in the future, but they did not. And to me, their business model didn't make any sense. I think a lot of the time I'm very wary of these, especially internet or app-based companies, like gig economy companies, because oftentimes they may sound good, but they don't necessarily, I don't see that there's a value. And so like WeWork as an example, to very, very simply explain their business, they would essentially lease out work buildings and then lease those offices out to individual businesses, or small independent contractors that would use that space because they didn't have the capital to buy it. And they were doing this in places where real estate is very expensive. So that initial investment is hard. In my opinion, the problem with that line of thought is that the advantages in investing in real estate, which is obviously a good thing, the advantages of investing in real estate generally only come when you own real estate because of the tax incentives. And so it's like they essentially are owning real estate with none of the incentives. So it's like it was pretty evident that there was some issues, at least from my outsider view. Snapchat is another really good example. They IPO'd at $27.09, and that was several years ago, and they have never touched that price since. They have only only been below their IPO their entire time on the New York Stock Exchange. And it's currently at 23.82. Now, that being said, there are times when, it's gotten down to like under $10, and then, okay, it might be a good deal. But from an IPO standpoint, I generally don't like to buy IPOs at the beginning because they, at least recently, have, been more likely to fall than to gain. And Uber is another one of the classic examples of these companies that, are zombie companies that don't make a profit but are around because of investment dollars holding them up. And so they IPO'd at $41.57, and they had a high of $46.38 that year in the initial run up. And then right now they're at $37.12. So I like to stay away from those in a general sense. And there are, many other companies that are available. So why would I go towards a hyped up stock that's brand new when there's so many already available? It's silly to me. It's kind of it's that new kid in town syndrome. It's like, just because someone's new doesn't mean that they're, you need to abandon your other friends and, chase them and they're more valuable. It's the same way with stocks, at least in the way that I'm thinking about it. I also don't like investing in things with a lot of hype because, generally speaking, that is going to be a little bit of an irrational investment because it's not focused on valuation, which at the end of the day, that's what stocks are about. They're about the valuation of the company and whether or not that company is undervalued. And if it is, you should buy it. And if it is not, you probably shouldn't, unless you think that it has a ton of growth. But I'm more of a value investor. Everyone, your mileage may vary. Now, that being said, with IPOs, if you have access to the stock before listing, then completely different story. But most of us retail investors do not have access to that, and you're going to be better off just buying an individual index fund. And Buffett, like Warren Buffett, who bought into Snowflake, historically agreed with this. But he has made this aberration with Snowflake, and I'm going to show a short clip from that.
Selling.
So basically, Warren Buffett, this is him with Charlie Munger in 2019, so only a year ago.
Incentives are there, commissions are done, and extra commissions. That's the single best thing to buy on a given day. I mean, it's
I can't think of a time we've ever done it.
Yeah.
Ever bought an IPO?
Yeah, never bought one.
Yeah.
And
How can it?
So Buffett and Charlie Munger both say a year and a half ago. So this is how much the downturn has affected Buffett's mentality. They say a year and a half ago that we've never bought an IPO, and Munger says, and we never will. So who knows what to believe anymore. Buffett is surprising us every day. If you enjoyed this clip, be sure to leave a like, subscribe, and check out the full live version of the Wealth for 99 podcast, where we talk finance, economics, and public policy from a working class perspective. We'll see you there.